So if you want to learn how to trade options, purchase my ebook located in the description below. If you're seeing this on TikTok, it is located in my IG bio. So how did I make $73 just trading a single SPY call option? So on February 7th, I got into one call option. Basically this candle, right? So I used the daily chart. I didn't use the 30-minute time chart for this trade. Basically what happened, right, was that when I saw that a SPY had landed somewhat near the 20-day moving average, I got into one singular call option, right? And then throughout the day, right, I was just waiting to see if there would be a little bit more upwards momentum, right? I just wanted to see if basically could SPY bounce off the 20-day moving average, right? Or would it actually land on it, right? That didn't happen, but it did get close to the 20-day moving average because the low reads 600, then the 20-day moving average reads 598. So I was just waiting to see if it could bounce off of it. That didn't happen. It looks like there was like strong support around this area, around the 600 area. And so once that support was found, right, basically SPY rebounded towards the upside, right? And I sold out that same day. Yeah, I sold out that same day at 1308. And basically when I sold out the position, right, I made an easy $73 gain just trading that singular SPY call option. And basically the goal is to basically try to buy SPY when it's oversold and then try to sell your position out once it's up either 5 or 10% or whatever your percentage gain is, right? So for me personally, I like to play it safe. I like to aim for a 5 or 10% gain. Sometimes I like to reach for a 20% gain, but that's only when I'm feeling really confident in that trade. And if I'm not feeling, that's really confident, I just stick to the 5 or 10% gain. That way I can, get in, get out, and try to buy SPY when I feel like it's oversold, right? So basically I try to get in, get out quickly, right? That way I can look out for the next opportunity. And so basically this trade, right, like I said, I used the daily chart. I didn't use the 30-minute time chart, right? And basically what I did was, okay, I'm just gonna wait and patiently see if SPY here on February 7th can land on the 20-day moving average, right? That didn't happen, right? But it did reach a low of 600, right? So what I basically did was like, okay, I see that SPY is approaching that 20-day moving average. Will it land on it or touch it, right? That depends. It all depends on what SPY decides to do, right? And so I just got into that single call option when SPY was down 600 something dollars, right? And so when I bought that SPY call option, right, I was like, okay, let's see if SPY can use that 20-day moving average as support, right? And bounce off of it, right? So that didn't happen, right? But you can kind of see the idea in a way that a lot of people, I guess a lot of people use the moving averages, right, for their trades, right? They're aiming for that 20-day moving average, right, as support. But meanwhile, these, I guess you could say not hedge funds, but like the people that control the market in a way, I guess they have the idea that, okay, these people want to, in a way, they want the people want SPY to approach the 20-day moving average, right, and bounce off of it. But that's not going to happen under our watch, in a way, sort of, right? Basically, in a way, you kind of want to try to outsmart the big players in a way, because sometimes they like to, I guess they're aware of what the little buyers are doing. So in a way, they kind of try to manipulate the market in a way in their favor. So in a way I was just like, okay, if it if I if I buy at 600, right, I can buy when it lands on the 20-day moving average, and that way when it lands on the not on the 20-day, yeah, on the 20-day moving average, that way when it lands on the 20-day moving average, right, I can buy another call option, right, and I can lower my average down. So instead of being down 5% now, I'm down now like 3 or 2% now, since I bought off the 20-day moving average, right? And if it uses it as support and bounces off the 20-day moving average, then I can see my my position be in the green a lot more faster, and I can see more money. Basically, I'll see a bigger gain if I dollar cost average, right? And so basically, try to uh, try to be smart with your entries. Try to be I guess like have a game plan set ahead of what could happen in the scenario if it gets rejected by a certain moving average. Try to have a scenario of what would happen if it lands on a certain moving average. Will it bounce off of it or not, right? Basically try to have your game plan set in mind in a way. So that's basically what I did for that trade. Let's see if I can show like a trade maybe. Let's see. Using the 30-minute time chart, right? Actually, let's use the daily chart. So let's say I bought a call option here, right, of Nvidia as soon as it landed on the 180-day moving average, right? I think it's a good position, and all of a sudden it decides to go down and lands on the 200-day moving average, right? Oh, so basically my next intention is to basically buy another call option once it lands on the 200-day moving average. From there, I'm just gonna patiently just wait and see for the next couple of days and see if can Nvidia try and break that stubborn 180-day moving average, right? Okay, this candle, you can see on January 31st, it got rejected by the 180-day moving average, and then saw a decline from there, right? And so what's my next move from here, right? Basically what I would do, if I see that my position right here, if I bought let's say my two entry points at the 180 and 200-day moving average, and my position is down 10%. Basically, once I see that Nvidia is down here, right, and my position is now down, I guess let's say 15 or 20%, I'll basically buy another call option here. That way my average, instead of being down either 10 or 20%, instead of being down 20%, my position will be down now maybe like, I don't know, maybe 15%. And then if my position is down either 10%, my position will be down 5% instead. So in a way, you're kind of trying to outsmart the big players in a way, or you're trying to have that plan, have that plan set in motion, right? Basically try not to worry what will happen in the short term. Try to think about the plan in the long term in a way. So basically, I would only buy another call option once I see that the Nvidia is above the 9-day moving average. For example, right here on January 6th is when you see that, okay, Nvidia finally saw a move above the 9-day moving average. I would buy another call option here. That way when that way when Nvidia starts going up even more, my position will be in the green, like not a lot more faster because it's already in the green, but basically my profit will be more bigger in a way, because I'm betting that I'm gonna see more upwards momentum from Nvidia, and I'm betting that I will see more profit towards my position in a way. Hopefully that kind of makes sense. Hopefully it does, but that's the best way that I can explain it, trying to use the daily chart to like trade, right? Instead of relying on the 30-minute time chart. Sometimes that's what that's what I use personally to trade in the market. So that's pretty much it. If you guys are looking to trade options, right, I have my ebook and my vendors available at worldly41.gumroad.com. And if you want to order directly from me, you can order from worldresells.bigcartel.com. And if you sign up with my Webull link located in the description below and deposit $100 or more, Webull will give you 20 free fractional shares. All of these links will be available in the description below. So that's pretty much it. I'll see you guys in the next video. I will upload maybe tomorrow, I'm not sure. I want to update you guys how the Dogecoin position is doing, so I probably will upload. So that's pretty much it. As always, this is not financial advice. As always, take care. Bye.